And we'll see if the guy down in Atlanta wants to talk about one of his favorite companies, and one of all of our favorite companies, judging by the Manifest 40, Cognizant Technology.
All right,
Take it
I
away,
will
sir.
take. Great, thank you, Ann, for portfolio recovery, and thank you, Mark. And as you mentioned, my pick tonight is, I believe, the fourth time we've selected Cognizant Technology. You can see the front side of the stock selection guide, the historical sales and earnings to include projected for the next 2 years, which you'll see this in a little bit different format in a minute, and also the value line low return of 10%, which I think value line for some reason on that respect is a little low, as you can see from my analysis, and also if you checked Manifest's consensus analysis. I haven't really tried pursuing it, but interestingly, value lines profitability and growth projections are fairly close to mine and Manifest, but I'm suspecting that they're cutting the PE a bit to get that little bit low return.
I think S&P and Morningstar are a little bit more optimistic on the PE.
Yeah. So anyway, here is same information in a little bit different format. I left my projections on this slide so that you can see pretty much where my projections of 20% sales growth is right in line with the 2011-2012 projections, which are off of Finance Yahoo, the same as Mark's slide that you saw earlier. The sales projection out on 2015, that's the value line 3 to 5 year projection for 14 to 16. So again, you can see that that's right in line. One thing that I will mention from this chart, just if anybody uses this and watches, what you really want to track, if you are like me and your projection line comes off the last quarter, or for that matter, if you project off the last trend line rather than the last fiscal year, you need to look at the slopes of the line, the slope of your projection line, and then the imaginary or the invisible slope, if you will, of the projections to see if you're in line. If you want to actually see whether your projections are at or below the analyst projections that you've put out there, change the start projection line to last fiscal year, and that will actually line them up and you can see. And in reality, as Ann had mentioned, my projections would be a little bit below, but pretty much in line with the consensus here. Next slide. Just a quick view of my analysis and where Cognizant came from this month. First of all, as Mark mentioned, it's a favorite stock of mine, both for the Roundtable as well as personally. It happens to be my personal largest holding in my portfolios. Also, it came in pretty high on the dashboard behind such stalwarts as RIM, I believe. Okay, I'll stop. And a couple of others. One good solid company just like last month was just above Cognizant was Oracle. I decided to go with Cognizant again, and I said let's just do a quick industry study using the industry pages from Value Line. I like to rank by quality first of all. You see here, basically Cognizant is tied with Emphasis Technology for top quality. Emphasis just eking it out a little bit better. Next slide. Then looking at potential return, ranking the industry by a potential return, Cognizant comes in third there, so it looks pretty solid compared to its peers. So I said keep charging ahead and go with it. Next slide, please. And then here is my individual judgment. Eagle For Cognizant, you'll notice I'm using a 17% growth rate on here. I thought I had changed that to track my 20%, but that's fine. We'll leave it at the 17%, which actually is not a pessimistic, but the least optimistic projection out there. It tends to come from a Morningstar value line, and the consensus analyst at Yahoo Finance are closer to the 20-21% range. Net margin 15%, which is a little above the trailing that you see, and that's using the average pre-tax margin for the last 5 years and applying to that the projected future tax rate of 28%. The reason I did that, of course, is a little bit, you could say I'm just converting my SSG into Eagle language, but I'm really not in this case, or that's not my motivation. One of the things that I think is depressing Cognizant's price a little bit right now is that India has given a significant tax break to companies that hire over there, essentially not charging them income tax. That has changed in 2011 and going forward, and it looks like 28% or so will be the tax rate going forward, which is about double their tax rate prior to 2011. So applying the pre-tax profit margin with the 28% rate gives me roughly a 15% net margin. So I'm comfortable with that. Then you can see the other judgments, the shares outstanding, which I took just from value line there. PE of 21 gives me a projected annual return of 15.6, which is still solidly in the green and enough to double us in 5 years and meet that 5% relative return that we want. So that's my pick this month.
Okay, thanks. Yeah, and with the median stock right now at about 8%, that's a pretty hefty margin of safety, if that's the way you want to think about it. Just a quick look at the Chronicles to show that it's relatively high compared to where it's been, even over the last 2 or 3 years.
And go back to that slide for a second, Mark, just to show that I'm not picking on RIM alone. Also, Hugh, notice we like the red line and the blue lines both going up at the same time rather than down.
Just remember, everybody, he gets the last microphone for the night, so he's a dangerous man.
You learn something every day, you know.
Yeah, really. Of course, the risk is...
Why did I mention about individual investors being nice?
That's right. Come on, guys, be nice. All right, we're down to Mr. Kavula, and he'd like to double down on a damsel selection of Adobe systems.